The third stage of a 3,000-year financial history has now begun. Over this time, there have been only 3 global reserve currencies, and each one has collapsed after passing through the same 4 stages. The dollar has recently hit its lowest level in 5 weeks, while silver has doubled in price over the past year. What is happening now has happened before. Rome, Spain, and Britain all followed the same pattern. The 4th stage is total collapse. Let's explore how this will unfold. Stay with me. When the dollar falls to 98.96, that's not just a number, it's a warning signal. We have entered the dangerous phase of a cycle that has destroyed every reserve currency in history. Silver is currently priced at $58.62, an 84% increase over 11 months. The dollar has dropped 7% year to date, declining for 9 consecutive trading sessions. Think this is mere market fluctuation? Let me explain how this mechanism works. Over 3,000 years, an unchanging 4-stage pattern has emerged. Stage 1 is establishment and strengthening. Stage 2 is expansion and debasement. Stage 3 is crisis and loss of control. Stage 4 is the inevitable conclusion. Right now, we are deep into Stage 3. By the end of this video, you'll understand why the silver surge is not the beginning of growth, but a warning, and what Stage 4 will look like. But first, let's break down the mechanism itself. Every global reserve currency emerges the same way. A country rises to leadership through real production and export. The currency gains trust backed by real value. Rome with its engineering, Spain with its fleets, Britain with factories, America with post-war industrial strength. This is the foundation. The third stage of a 3,000-year financial history has now begun. Over this time, there have been only 3 global reserve currencies, and each one has collapsed after passing through the same 4 stages. The dollar has recently hit its lowest level in 5 weeks, while silver has doubled in price over the past year. What is happening now has happened before. Rome, Spain, and Britain all followed the same pattern. The 4th stage is total collapse. Let's explore how this will unfold. Stay with me. When the dollar falls to 98.96, that's not just a number, it's a warning signal. We have entered the dangerous phase of a cycle that has destroyed every reserve currency in history. Silver is currently priced at $58.62, an 84% increase over 11 months. The dollar has dropped 7% year to date, declining for 9 consecutive trading sessions. Think this is mere market fluctuation? Let me explain how this mechanism works. Over 3,000 years, an unchanging 4-stage pattern has emerged. Stage 1 is establishment and strengthening. Stage 2 is expansion and debasement. Stage 3 is crisis and loss of control. Stage 4 is the inevitable conclusion. Right now, we are deep into Stage 3. By the end of this video, you'll understand why the silver surge is not the beginning of growth, but a warning, and what Stage 4 will look like. But first, let's break down the mechanism itself. Every global reserve currency emerges the same way. A country rises to leadership through real production and export. The currency gains trust, backed by real value. Rome with its engineering, Spain with its fleets, Britain with factories, America with post-war industrial strength. This is the foundation. Next comes Stage 2, the time of dangerous temptations. The dominant nation realizes it can print money and the world will keep accepting it. Why? Because the currency is integrated into global trade infrastructure. Everyone holds its reserves with no alternative yet. Spending starts to exceed income. Wars, empires, social programs, deficits build up over decades. Consequences are hidden and delayed. Trust remains despite the currency's falling value. It's an illusion of prosperity slowly decomposing the system. Now we are at Stage 3, crisis and loss of control. Deficits become uncontrollable, debts unpayable. Money printing accelerates to cover obligations. At this point, other nations notice and begin diversifying reserves, shedding the currency. Gold and silver start moving, markets speed up. Slow price decline shifts to rapid devaluation. Central banks try to intervene, cutting rates, printing money, promising stability. But all this only worsens the crisis, since its root is systemic. Trust breaks down. The foundation crumbles. Stage 4 is complete currency collapse or sharp depreciation. Paper assets lose value. Wealth concentrates with holders of real assets. Reserve status is lost. Global power balance shifts. The scariest part? This stage unfolds very quickly, over months, not years. Once trust falls and feedback loops start, stopping the process is nearly impossible. If this sounds theoretical, let me give 3 precise historical examples. Rome from the 2nd to 5th century, Spain in the 16th to 17th, Britain in the 19th to 20th century. The same scenario, the same outcome. Let's look closer, starting with Rome. In 301 AD, the denarius was in a position similar to today's dollar. Stage 1, Rome dominates. The denarius was 95% silver, fully trusted. Stage 2, expansion. Wars got more expensive, silver content fell from 95 to 50%. Each emperor reduced quality. Trade continued as no alternative existed. Stage 3. By the 3rd century, silver content was 5%. Inflation rose 400-fold over a century. Workers demanded payment in goods. Soldiers refused to fight for cheap coinage. Emperors minted more money. Inflation accelerated. Stage 4. In 476 AD, Rome fell. The denarius collapsed. And Europe entered 3 centuries of barter economy. If this example made you think, subscribe. It only gets more interesting. Spain in the 16th century opened the New World and received inflows of gold and silver. The real became the global reserve currency, an empire where the sun never set. But the country produced nothing and imported everything, paying with raw materials from new lands. Money left faster than it came in. Stage 3. In the 17th century, inflation in Castile rose 400%. Mines depleted, while other European nations built real economies. Spain devalued currency and defaulted multiple times over 70 years. Stage 4. By the mid-17th century, the real lost influence outside the empire. Financial centers shifted to Amsterdam and London. Spain's golden age ended. Britain in the 19th century industrialized first and controlled global production. The gold-backed pound sterling became the reserve currency. Trust was absolute. World War I required large borrowing. The gold standard was abandoned. Debt soared from £650 million in 1914 to $7,400 million in 1919. A tenfold increase in 5 years. Attempts to return to gold standard failed as reserves drained. America rose as producer and creditor. Stage 3. In 1931, Britain left the gold standard. The pound dropped 25% overnight. Other countries panicked and dumped pounds. The sterling bloc collapsed. World War II finalized the shift. By 1945, Britain was bankrupt and dependent on America. Stage 4 was clear. The dollar became the global reserve currency. Do you see the pattern? The dollar is following the same path and is now in Stage 3. After World War II, America controlled half of global GDP and had a powerful industry. The dollar was backed by gold at $35 an ounce with absolute trust. The world needed dollars for oil and trade. In 1971, Nixon ended dollar to gold convertibility. The dollar became pure fiat. America began spending more than it earned. Wars, social programs, military bases worldwide. Debt rose from $370 billion to $36 trillion by 2025. M2 money supply grew from $600 billion to $21 trillion, a 35 times increase. The world kept accepting the dollar because oil and trade were pegged to it and no alternative existed. The Fed printed extensively, imbalances worsened. America consumed, the rest of the world produced. Stage 2 lasted 54 years. Now at Stage 3. Numbers speak for themselves. $36 trillion in national debt, $135 trillion in unfunded obligations. This is not abstract. It's an unbearable burden. The Fed cuts rates from 5%, possibly below 4%, injects liquidity, tries to save the system, but other countries no longer just watch. China cut holdings from $3 trillion in 2013 to $780 billion in 2025. Russia dumped dollars years ago. Saudi Arabia accepts yuan for oil. BRICS build alternatives to the dollar system. Central banks buy gold at record pace, 818 tons in the first half of 2025. Watch silver, the canary in the coal mine. Its price rose from $28.92 in January to $58.62 in December, an 84% increase. Why? Industrial demand grows. Solar panels, electric vehicles, AI data centers, nuclear reactors, 5 years of supply deficits. Shanghai silver inventories at decade lows. Physical metal vanishes. Investors flee fiat, adding 200 tons to silver ETFs in one day, the highest since 2022. Meanwhile, the dollar index fell to a 5-week low at 98.96, down 7% year-to-date, 9 consecutive down sessions. Euro, yen, and emerging market currencies strengthen against the dollar. Changes accelerate. The Fed is trapped. Cutting rates weakens the dollar and returns inflation. Holding rates high makes debt unsustainable, risking defaults and recession. Choices are bad or worse. Market prices an 80% chance of a rate cut on December 10th next week. This leads to more dollar weakness, inflation, and panic. We are deep in the second and early third stage. If this information is new and clarifies much for you, subscribe so you don't miss updates. Many believe America is special, with its military, technology, and strong economy. But Romans had a mighty army, yet the denarius fell. Spain had the largest empire, but the real collapsed. Britain controlled a quarter of the earth, but the pound lost status. Military might and technology don't override economic laws. There are no exceptions. Systemic crisis is inevitable. Once Stage 3 starts, Stage 4 always follows. What awaits the dollar? No instant collapse or chaos, but it will inevitably lose reserve status, likely this decade or the next. America will face real inflation, 10, 20% or higher. Interest rates will soar, cheap credit vanish, austerity will be enforced, and living standards will fall for most. This affects everyone holding dollar assets, savings, or fixed income. On the other hand, real assets will rise: gold, silver, commodities, farmland, energy, infrastructure. Wealth won't vanish. It will transfer from paper to real assets. History repeats endlessly. What to do? This is not investment advice. Study independently and consult experts. If you understand the scenario, diversify. Don't hold everything in dollars, but don't exit entirely. Bet on assets protecting against currency debasement. Physical gold and silver, not paper ETFs or futures, but metal you can hold. Why silver? Dual demand, industrial and monetary. Deficit grows. Price can rise faster than gold or currency crises. From 2008 to 2011, silver rose from $9 to $50, a 450% increase. Similar or bigger jumps are possible today. Also, hold productive assets, farmland, energy projects, water rights. These create value regardless of currency. Reduce debts where possible. In devaluation and rising rates, debt can become a trap. Most importantly, stay informed. This process will take months and years, not happen overnight. Price spikes and corrections will occur, but the trend is clear. The current silver rally is not a bull market, but a warning. The dollar's 9 consecutive down days mark the start of a feedback loop. Weakness breeds more weakness. Diversification strengthens. Trust breaks down. History shows stage 4 is close. If this resonates, subscribe. I'll track developments and share updates. Thank you for watching.